Welcome to NTD Business. I'm Don Ma. U.S. stocks ended higher to kick off the trading week on Monday. It was buoyed by gains in financial and technology shares. Investors are also waiting for the next round of quarterly results this week as earnings season starts off. S&P and the Nasdaq have advanced in 5 of the past 6 sessions. Tesla gained after the company said on Saturday it had built its first Cybertruck after 2 years of delays. In contrast, Ford Motor tumbled after the automaker cut the price of its F-150 Lightning trucks. More on that in just a moment. Activision Blizzard rose after Microsoft said it has signed an agreement to keep Call of Duty on PlayStation following its acquisition. And AT&T slumped to a 30-year low after Citi downgraded the telecom operator. More on that also in just a moment. U.S. bank executives warned on Friday that looming higher capital requirements would raise prices for financial products. Federal banking regulators are expected to introduce proposals in the coming weeks that will require banks to keep more cash on hand. Bank executives now are already warning about potential drawbacks. J.P. Morgan Chase's chief financial officer said, quote, "Higher capital requirements definitely increase the cost of credit, which is bad for the economy." J.P. Morgan Chase's chief executive officer said on a conference call on Friday after the bank reported its second quarterly earnings. The lender may increase prices or abandon some products as a way to offset the higher capital costs. And striking Hollywood actors have joined film and television writers on picket lines, forcing U.S. studios to shutter productions as workers battle over pay in the streaming TV era. Here's which company is not affected by it.
Hollywood is at a standstill due to strikes by actors and writers. It means investors must weigh up the risks as Netflix prepares to report quarterly results Wednesday. Analysts believe the streaming giant is well positioned to cope with the walkouts, that due to a solid pipeline of shows and international production crew. Hollywood actors joined film and TV writers on picket lines last Wednesday. It forced US studios to stop productions as workers battle over pay in the streaming TV era. One leading analyst said Netflix's international production capabilities are a huge differentiator, and a lot of its content comes from countries not involved in the strike. It's also expected to report its highest second quarter subscriber additions in 3 years. Over the past week, 3 brokerages raised their ratings on Netflix stock, while 5 lifted their price targets. The firm's crackdown on password sharing is reaping returns, and its cheaper ad-supported plan is finding more takers. That as the company copes with competition from the likes of Disney Plus and Amazon's Prime Video. Analysts project Netflix has added a net 1.77 million subscribers. The company lost nearly 1 million subscribers in the same period last year.
Months since Elon Musk bought Twitter back in October, is the social media platform now making money? Seems like not just yet. Here's more.
More woes for Twitter as owner Elon Musk says the company has lost half of its ad revenue. That, combined with a heavy debt load, mean Twitter's cash flow remains negative. Musk bought the social media platform for $44 billion in October and proceeded to go on a cost-cutting spree, laying off thousands of employees and cutting cloud service bills. Musk said back in March he expected Twitter to reach cash flow positive by June. But on Sunday, he acknowledged that hadn't happened, adding that, quote, July is a bit more promising. It is unclear what time frame Musk was referring to by the 50% drop in ad revenue. But since he took over, Twitter has been criticized for lax content moderation, leading to an exodus of many advertisers who did not want their ads appearing next to inappropriate content. Musk's hiring of Linda Yaccarino, the former head of advertising at NBC Universal, signaled that ad sales remain a priority for the site. Yaccarino started work as CEO in early June and has told investors the site plans to focus on video, creator and commerce partnerships. It is said to be in early talks with political and entertainment figures, payment services and news and media publishers.
And Ford deepened a price war in the electric vehicle industry on Monday by slashing the prices of its F-150 Lightning trucks, including a 17% cut for the base model. This is as it aims to boost its share of an EV market dominated by Tesla. Lisa Bernard has more.
Ford has ramped up its price war with Tesla, slashing the cost of its F-150 electric Lightning pickup truck by up to 17% on some models. By doing so, the Detroit automaker hopes to increase its share of an electric vehicle market dominated by Tesla. The move comes just 2 days after Tesla announced it had built the first production version of its long-delayed Cybertruck at its assembly plant in Austin. Tesla had kicked off the price war months ago, leaving EVs of legacy automakers piling up at dealers as sales slowed. In the quarter through June, Ford's EV sales fell 2.8%. Tesla, meanwhile, reported a surge in second quarter deliveries. Ford, which had raised Lightning prices earlier this year, said it was now able to lower them due to improvements in scale and declining costs of cobalt and lithium, key materials used to make batteries. It also plans to triple Lightning production to 150,000 vehicles a year. The price of the base Lightning Pro model will fall nearly 17% to just below $50,000, while Ford's extended-range high-end Platinum model will drop about 6.2% to roughly $92,000. All other models will now start below $80,000, the maximum price eligible for a $7,500 consumer EV tax credit. Ford shares were down 5% in Monday trading. Shares of Tesla rose more than 2%.
Shares of AT&T fell more than 5% to hit their lowest level in 30 years on Monday. This comes after analysts downgraded the stock following a news report that the company left toxic lead cables buried across the United States. A Wall Street Journal report on July 9th named AT&T and Verizon among several telecom giants that abandoned a sprawling network of underground toxic lead cables, with a huge number of them possibly contaminating neighboring soil and drinking water sources. Analysts at Citigroup and JP Morgan both lowered their recommendations on AT&T shares in recent days. The stock has lost a quarter of its value so far this year, having dropped 12% since the Wall Street Journal report. The shares hit a low of $13.68 in Monday's session, the lowest since March 1993. And more signs that China's post-pandemic recovery is losing steam. New quarterly GDP numbers paint a not-so-optimistic outlook. Here's more.
Beijing is under mounting pressure to do more to boost the economy. That after some feeble growth numbers on Monday. GDP expanded 0.8% from April to June. Though that was actually better than analysts expected, it was way down on the 2.2% in the previous quarter. Demand weakened at home and abroad, and analysts say the numbers prove that a post-lockdown rebound has ended. But Statistics Bureau officials said they remained optimistic despite tough conditions.
从全年看, From the perspective of the whole year, despite the pressure and challenges with the improvement of employment, the increase of residents' income, the gradual strengthening of domestic demand, the optimisation and adjustment of the supply structure, and the growth and expansion of new momentum, the economy will recover steadily and the quality of development will continue to improve.
The focus now turns to a meeting of China's Politburo later this month. That could be when new measures are decided. Insiders say likely steps include more spending on big-ticket infrastructure projects, more support for consumers and private firms, and some steps to help the property market. But other data has also pointed to a slowdown, with retail sales growing less than expected in June. Some economists say it all leaves China in danger of missing its modest 5% growth target for the year.
Tom Cruise and Mission Impossible Dead Reckoning Part 1 easily debuted at the top of the weekend box office. Here's this week's movie news.
How you doing?
Living the dream.
Elemental made $8.7 million for fifth place in a domestic total of $125 million. Indiana Jones and the Dial of Destiny fell to fourth place in its third weekend out, grossing $12 million. $13 million put Insidious: The Red Door at number 3.
Don't ever step into my office again looking like you just walked out of a freaking Banana Republic ad.
Sound of Freedom sold another $27 million worth of tickets to finish second.
It's been a long time, friend. You've no idea the power I represent. It knows your story.
Mission Impossible: Dead Reckoning Part 1 opened on top with $56.2 million from Friday through Sunday, lower than the debut of the previous film in the series, 2018's Mission Impossible Fallout, but setting a franchise record with $80 million in its first 5 days since opening Wednesday.
Wheat and corn prices on global commodities markets jumped Monday after Russia pulled out of a crucial deal allowing the export of grain from Ukraine. This was just hours after a blast knocked out Russia's bridge to Crimea. Here's more.
Russia has suspended participation in the Black Sea deal that allowed Ukraine to export its grains. Moscow announced the move Monday. It came just hours after an alleged attack on the bridge to Crimea, but officials denied there was any connection. Kremlin spokesman Dmitry Peskov said the West had failed to implement measures intended to facilitate Russian exports.
The grain deal has halted. As soon as the Russian part of the deal is fulfilled, the Russian side will resume the fulfillment of this deal without delay.
The last ship carrying grain left Ukraine on Sunday. Nearly 33 million tons of corn, wheat and other grains had been exported by the country under the deal. Now Moscow's move will raise concern over global food supplies and prices. Carlos Mira is head of research for agricultural commodities at Rabobank. He says developing nations look vulnerable.
So prices will go up. That will mean more food insecurity at a time when, of course, countries, especially underdeveloped countries, are struggling with debt in many cases. So we will expect food security to become an even more pressing topic in the future.
The initial market reaction to the deal's demise was muted. Wheat futures rose around 3%. Traders said there was a view that the EU and other suppliers would be able to satisfy demand. But leaders remain concerned and will hope to revive the agreement. Turkish President Tayyip Erdogan said he would discuss it with Vladimir Putin at an expected meeting in August. Erdogan said he believed the Russian leader wanted the pact to continue.
For more on Russia backing out of the grain deal, here with me is Daniel Lacaille, chief economist at Tressis Hedge Fund. Daniel, so I was thinking, let's set the stage a little bit here. Now, Russia backed out of this deal. How important is it?
It is exceedingly important because Russia and Ukraine account in some of emerging economies for 80% of the imports of grain and of cereal. It is therefore a very radical decision that can make a very significant problem, can create a very significant problem for many developing economies. And we tend to forget how important grain and cereals are in the overall economy for the primary sector. So it's going to create a very significant tightness if they back out for a prolonged period of time and if they don't turn back. And it will create a very significant problem precisely in a year in which the farming and the crops all over the world have not been particularly good. So the tightness in the supply chain is very evident, and therefore it is no surprise that wheat prices, for example, in commodity markets have risen dramatically on the news.
So to be clear, what you're saying is this is going to put a bottleneck on supply, and this could impact a range of areas. Could you tell us what exactly will be the impact if supply shrinks?
Well, very, very important. For example, cattle. It's going to be very difficult to feed cattle. It's going to be very, very difficult for many of the developing economies to get the cereals and grains that they require for their daily food supply. So it's not just for humans, which is already a very important problem. It's for the overall economy. We tend to forget sometimes how important wheat is in numerous areas of the primary sector. So, as I said before, there are some developing economies that rely between 70 to 80% on the imports from Ukraine and Russia. The crop season in Ukraine obviously has been exceedingly poor, and in other developed economies that could offset that impact has also been quite weak. Therefore, there is no evident way to offset the impact of Russia suddenly deciding to back out of this agreement.
Are you saying there's really no way to circumvent this?
Virtually none. To fully offset the impact of Russia is virtually impossible globally today. Virtually impossible. It is true that there can be efforts made to bring some of the supply from Latin America and other economies that may help reduce the impact. But offset it, it's virtually impossible.
All right, Daniel Lacalle, Trest's hedge fund, thank you very much.
Thank you very much.